Hello, Verity traders. This is our weekend analysis. Let's see what happened this week and what we have in store for the next one. All right, it's been a very volatile market, and the S&P and the Nasdaq had a little scare. There was downward pressure, ugly red candle on high volume. Everybody was thinking about the worst. Crypto were in free fall. Gold and silver were moving down. Everything was moving down. And then at some point on Friday, we had this huge bounce back. The S&P was up 192% on a Friday and the Nasdaq 2.11%. Big volume, nice big green candle. Obviously, the S&P is in a better situation than the Nasdaq. It has always been because the software and AI sector are still lagging. And the S&P, we are again above the 20 SMA, above the 50 SMA. Again, we didn't go anywhere. This is the same range. Let's see if it's going to keep going higher. And then the Nasdaq, we're still in this range. I mean, this literally didn't go anywhere since like October, December. Let's see what happened on the calendar. So we have high volatility. The software and AI stocks are still lagging. They're underperforming. It's not a good time to trade those big names, the Microsoft, the Nvidia, the Apple, the Amazon. Even if they crash earnings, these stocks are moving down. This is not yet the environment for tech stocks trades. On the other hand, regular stocks are strong. The RSP, which is the equally weighted S&P, keeps moving higher. It's a bullish chart, is an uptrend, undeniably. So we need to be aware of that. We had unemployment claims that rose to 231,000, which was hotter than expected. But we also have the ISM manufacturing PMI that went above 50 for the first time. So this was a good thing. Again, it's not all gold, it's not all amazing, but still it's not a bad thing considering that the week wasn't a great week in economic terms. Bitcoin and crypto on a free fall. They had a bounce on Friday, but again, we don't know if there's still downward pressure. Gold and silver have been stabilizing a little bit. So very, very volatile markets. What we have on the economic calendar, CPI. CPI on Friday, I think is going to be the market mover. Yes, we have unemployment rate on Wednesday and non-farm employment change, but I think that to upset the market very, very much, this might be like a negative number, and this should have been very, very higher than expected. So the CPI, I think might be the real market mover, because again, we still have some sticky inflation, and that's what's going to be in focus. Again, this didn't change from last weekend analysis. Relative strength and weakness are key, and they're always going to be. Here on the maps for the week, we see that the tech sector is lagging. It's definitely in red. It's always been in red for the past weeks. But again, the normal stocks, regular stocks are performing very well. Consumer defensive are like a very bullish sector. Industrial are doing great. Financials are recovering. Healthcare has always been good. Energy is on a run. So again, you just need to know where to look. Please don't start trading the names like Nvidia or Apple. It's okay, let me buy the dip now, they're cheaper, because we don't know yet when it's going to be a good time to buy this stuff again. It's going to come at some point, but I don't think it's yet the time. And then as usual, less exposure is less risk. You don't have to put on trades all the time. Cash is a position. Again, volatility is high. It doesn't work well for all strategies. So depending on your strategy, if it works well in volatile environment or not, you need to make a decision if to trade or not. Always trying to be safe. Let's see what's going to happen next week, if the bounce will continue and we're going to move higher or not. But remember, you need to look at the strong sectors, and that's where you want to look for trades. That's it. Again, not financial advice. Take responsibility for your trades, and I'll see you next time.